The Federal Reserve is worried about another big economic collapse about to happen. And there's two key areas that they're most concerned with. We'll tell you what those are. But first, this. Look, let's admit we have a problem. Not all of us have time to sit around and read huge, thick books like this. We're super busy. Plus, we've got little kids, squishy-faced little kids that we want to spend time with. Look at this little squishy face. Wouldn't you want to spend time with this? And squishy-faced dogs like Grover that we want to spend time with. So that's where Blinkist comes in. How would you like to read a book like this, 600 pages, in under 15 minutes? That's exactly what Blinkist does. They condense the world's best books down to bite-sized readable content. It's super easy to use right on your phone. Download the app and you can scroll through and pick the books you want to read. They have thousands of books to choose from, 3,000 nonfiction books. They'll condense them down into just 15 minutes. You can read or listen to them podcast style. A great book that I read on Blinkist is James Clear's Atomic Habits, How to Build Better Habits, and you can learn it in under 15 minutes. And because Blinkist is sponsoring today's episode, they're giving you an amazing offer. The first 100 people right now who are watching this video, who click this link below and go to Blinkist.com/MorrisInvest, you're going to get free unlimited access for the first week. So you can tear through so many books and check it out and see if it's a fit for you. And then you'll get 25% off your membership after that. So go check it out right now. Go to Blinkist.com/MorrisInvest. You want to spend time with this? Well, a few weeks ago, the Federal Reserve held a private meeting, and we get to read their meeting minutes. It's like kind of going through your diary or someone else's diary and seeing what they had to say. Well, one of the big takeaways from these meeting minutes is that they are concerned about the weight of this pandemic on this economy, and it is not good. So yes, while we're seeing housing doing really well, and we're seeing a lot of big businesses in Wall Street doing really well, the big tech giants doing really well, billionaires are doing really well, but guess who's not doing really well? Yeah, that's right, you and me, the little guys. The guys that don't have a lot of money, don't have a multi-billion-dollar business, the people that are relying on stimulus money, the people that are relying on unemployment benefits, the people that have been furloughed or told that they're not going back to their job, or they're furloughed and they say, you can come back in a few months, maybe. That's what's happening across the economy. So the Federal Reserve in their meeting minutes was really worried about two key areas. Number one, the banking industry. Number two, the failure of the federal government. That's right. They've been calling on the federal government to pass new legislation in the form of stimulus to help businesses, to help the American worker. Because after all, GDP in this country, our gross domestic product, is driven by you spending money in the economy, right? When you go to restaurants, when you go to the stores, that is the bulk of what drives the American economy. You would think it might be billionaire businesses and so forth. No, it's not. It's actually you going to the mall and going to the food court, having dinner. It's going to that Gap and buying a shirt for back to school and buying that backpack at Target. That's what drives the U.S. economy. Guess what? When you don't have the confidence to do that and you're not spending money in the economy, everything starts to collapse. Now, their concern about the banking industry is really interesting. What they're really concerned about in the banking industry is what the banks are already aware of, which is defaults. Jamie Dimon and others have come forward and said they're setting aside billions of dollars, upwards of $43 billion, to deal with all of the people that aren't going to be able to pay their mortgages. There's so many people that own businesses, that have businesses in a strip mall, and guess what? Though they can't pay the rent anymore in that strip mall because no one's coming in and shopping for the dry cleaning or doing what they normally do, just think about the amount of defaults we could be facing. And that's what the Federal Reserve is worried about. All of those strip malls that are drying up, where people aren't shopping anymore. People got to pay the mortgages. If they can't pay the mortgages, guess what happens? They have to default. And now all these banks are on the hook. They're property owners again, which is not something that they want to be. What about homeowners who now can't pay their bills anymore? They can't pay their mortgages because they've lost their job and they have to default. There's no government assistance there to help them. There's no loan forbearance from the federal government. There's no landlord assistance from the federal government. There's no rental assistance from the federal government. So when those renters can't pay rent, then that means the landlord can't pay the mortgage. That means the mortgage company doesn't get the money at the bank. That means the property taxes aren't paid to the city. It's one big, nasty, nasty circle of incompetence. And the federal government has the opportunity to step in with a stimulus package to try to alleviate all of this right now. That's exactly what the Federal Reserve has been saying. They've been shooting up these warning flares for months now. We've been reporting it here on the show as early as April, that the Federal Reserve is going to be concerned about the banking industry and making sure that the American consumer and worker has enough money to be able to pay their bills, and that has consumer confidence enough to be able to put money into the economy. Look, the reason all these other countries have done so well during this pandemic is because they've actually made sure that their citizens had $2,000 a month in stimulus money so that that money could be flooded into the system, keeping businesses open by buying goods and services. In the United States, we only got one check, and that confidence that we would get anything else has plummeted our ability to go out and buy stuff. And the fact that we only got one check, that Americans only got one stimulus check, has driven down our confidence in what the government's going to do. So that's why we're not spending any more money. We don't know if any more money is ever going to come. Now, according to the Federal Reserve, the banks are in good shape right now, but they are hoarding cash, setting aside money to deal with all of the defaults they're about to face, both in the residential mortgage section and, more importantly, the commercial real estate section. Think about all of the malls that are about to go under, all of the strip malls that are about to go under, and all of the small businesses that are about to collapse because the federal government can't get its act together and pass a stimulus. Another big reason the Fed is scared about not getting a stimulus package in place is because we borrow against our future version of ourselves. You know, it's like borrowing from future Clayton. You know, I'm going to borrow from myself in the future. And that's exactly what the federal government does. And so when we don't go out there and show growth in the economy, when we're not buying goods and services, when we're not putting money back into the economy, we're not starting new businesses, instead businesses are collapsing and we're not spending money, then we're borrowing from a loser version of ourselves, right? We're borrowing from a worse off version of ourselves. And we have a massive $24 trillion national debt right now. The idea would be to borrow from what we would think would be a better version of ourselves. But that's not happening. You know, one silver lining in all of this from the Fed has been that mortgage rates have been so low and people are buying homes like crazy. And that's been great for our economy. However, those mortgage rates could actually go up as well, even with the Fed keeping rates low. So even that one little silver lining could be lost because guess what? Banks are going to be seeing that they need to be taking on additional risk right now. And one area that they can increase profits is by increasing the interest rates for mortgages. If they're going to be defaulting like crazy on the commercial real estate side as well as the residential real estate side, those rates could go up. So bottom line, the Federal Reserve is putting it in black and white in their meeting minutes, telling us in no uncertain terms that they are concerned about a gloomy outlook for the economy in the next year, and that the federal government is their biggest concern around a failure of them to show leadership and pass additional stimulus for small businesses and the American consumer. And they're concerned about the banking sector, that if the banking sector collapses, we will have nothing there to prop it up, because we are so massively in debt and our balance sheets are so weighed down with all of this borrowing that we will not be able to step in and save them. Big concerns from the Federal Reserve. Let me know in the comments below what you think. Let me know what you think about the Federal Reserve news. Drop me a comment below. I read them all, and go ahead and smash that like button. We'll see you next time, everyone.